The numbers are in, and over the last 5 years, Hobart was by far the best performing market in Australia. If you have invested there 5 years ago, it is likely that you have seen a growth of almost 100%. And if you have purchased in the right suburbs like I did, you have seen a growth that is higher than that. It is pretty crazy to see numbers like this, especially when the Australian property market as a whole during this period went through a correction, with Melbourne and Sydney dropping around 10 to 15% of its value. I think investors in Australia have a crazy obsession with the Melbourne and Sydney property markets, and they are willing to lose hundreds or even thousands of dollars every single month just to buy into these markets. This is what they call negative gearing, but I see it as making a guaranteed loss every single month in the hope that over the long term, the capital growth is going to cover these losses. I know this strategy has worked extremely well for a lot of people who got into these markets early, but this is not the strategy for me, and this is why I invested in Hobart 4 years ago. In today's video, I'm going to share with you guys the main reasons why I invested in Hobart back in 2017, and some of the indicators that I used to aid my decision making. Remember guys, this is not financial advice, and I am not a financial advisor. I am simply some guy that you found on the internet. If a random person walks up to you on the street and starts giving you random real estate advice, would you listen to them? No, you wouldn't. You would do some research of your own before investing hundreds of thousands of dollars. And this is no different, so make sure you do your own research before investing your hard-earned money. Let's start with the obvious. Why not Melbourne, and why not Sydney? If you went to a family barbecue, a work gathering, or any social event, you will always have that one person who's going to tell you that Melbourne and Sydney are the only markets that you should invest in, and you should not even consider any other markets in Australia. At least that's all I heard when I spoke to anyone about property back in 2017, when Melbourne and Sydney were going absolutely crazy, just before it crashed by about 10 to 15% in the years that followed. Instead of listening to these opinions, and if we looked at the data over the last 40 years, sure, Melbourne was by far the best performer in Australia. However, 40 years ago, Melbourne was a very cheap city to buy a house in. It was the 4th most expensive city in Australia, behind Sydney, Canberra, and even Perth. The fact that Melbourne was so affordable definitely played a strong role in its strong performance over the last 30 years. But as we already know, this is no longer the case, and affordability is now a serious issue in Melbourne. Looking at the performance of Sydney over the last 40 years, it was pretty average. Melbourne and Canberra performed a lot better, and Adelaide, Brisbane, Hobart all generated a growth that is very similar to Sydney. But remember, the rental yield in these markets are much higher than the rental yield in Sydney, meaning the total return in Sydney is actually pretty much dead last. The only market it managed to beat was Perth. So why am I sharing all of this with you? Well, I think it is very important to look at all the different markets in Australia and not just focus on Melbourne and Sydney, because a lot of people are very biased towards these markets. And I also want you to understand that when people say Melbourne and Sydney are the best performers over the long term, it is not true. Let's now move on and talk about indicators that we can look at to find markets that are ready to start growing. And the first indicator that I want to talk about is the property cycle. For those who don't understand what a property cycle is, it is actually quite simple. A property market is constantly going through 3 phases: the growth phase, the recession phase, and the recovery phase. When a property market starts growing at a rapid rate, it simply can't sustain that. Like what we are seeing now in Sydney and Hobart, those markets are growing in excess of 20% a year. After a while of strong growth, these markets will need to cool down a bit, and this is when we will see a recession phase, and this is when the price is likely to start dropping or go sideways for a number of years. Eventually, the price will bottom out and trend sideways for a period of time, and this is the beginning of the recovery phase. If we go back in time, we will see that this cycle repeats itself over and over again. Going back to 2017, I had 2 options. I could either invest in Melbourne, which has been growing very strongly for many years, or I could invest in Hobart, which was starting to see a bit of growth after a long period of stagnation. Now, this is what most people get wrong. most people will choose Melbourne because they think that the strong growth will continue. However, looking back at history and the previous property cycles, I realized that the growth we are seeing in Melbourne is simply not sustainable and that we are getting very close to the peak of the cycle. And this is why I decided to not invest in Melbourne. But on the other hand, we have Hobart, which has not seen any real growth for a number of years. And it was the most affordable market in Australia, and the affordability constraints were nowhere close to the median house price, which meant that it had a lot of room to grow. Another indicator that I really like is the vacancy rates. Now, a lot of people say that the vacancy rate is not a good indicator, but I disagree. I think the vacancy rate is a great indicator to give us an overall on the health of that property market. The vacancy rate is very important because it tells us how many properties are likely to be vacant in that particular market. For example, if a market had a vacancy rate of 1%, for every 100 properties, there should be one vacant property. However, if you look at the vacancy rates on a longer time frame, it also gives us a lot of useful information on where it's going and which way it is trending. If we now look at the graph here showing the vacancy rate in a suburb of Hobart, we can see that since 2013, the vacancy rate has been trending downwards from a high of 2.8%. A vacancy rate of 2.8% is actually not even that bad. The vacancy rate of Melbourne right now is just a bit above 3%. When I purchased my property in Hobart back in 2017, the vacancy rate was at 0.3%, which meant that out of 100 properties, we are very unlikely to even see a single vacant property. This gave me some great insight into that particular market. It told me that 1, there was a housing shortage in that particular market, and 2, that housing shortage was getting worse and worse because the vacancy rate was getting lower and lower every single year. And 2, the demand for housing in that particular market was increasing dramatically because when we looked at the government data for housing supply, there was a bit of housing being added to the market. However, all of that supply was being absorbed extremely quickly. And finally, if we look at the vacancy rate over the long term, we can see that Hobart never really struggled with a vacancy issue and that it has been consistently low for a very long period of time. This gave me a lot of confidence knowing that it is very unlikely for me to have long vacancies for my investment property, because that is every landlord's worst nightmare. Let's now move on and talk about affordability. This is a factor that a lot of people simply ignore. So why is that so important? Let me ask you a question. Who drives the market? Is it the investors who are buying properties purely for profit, or the first home buyers and owner-occupiers who are buying a place to live in? Looking at the data and looking at history, it is usually the owner-occupiers who drive the market. And whenever the investors start to dominate a certain market, that's when the government steps in to cool the market. Don't believe me? Let's go back to 2017. What happened back then? Well, the markets of Melbourne and Sydney were exhausted after a crazy growth period, and many owner-occupiers and first-home buyers were becoming priced out because of the affordability constraints. And that's when investors took over. They started controlling the market. But that was when APRA stepped in to cool the market, because as the level of investor activity increases, the market starts to have more speculation. Now, going back to affordability. Affordability is so important because it doesn't matter how badly these owner-occupiers want to buy a property. But if the bank won't lend them enough money to buy into these markets, there's nothing they can do. All the other indicators like days on market, the clearance rates, the number of listings and number of supply is pretty much irrelevant if these owner-occupiers can't get the money to buy these properties. This is the problem I'm seeing now in Melbourne and Sydney. People are becoming priced out and the affordability constraints are starting to kick in. And combined with higher interest rates and tougher lending practices, people are struggling to get these loans they need to keep driving up house prices. Once again, going back to 2017, I had 2 options. I could either buy into Melbourne and Sydney, where the affordability was horrible, or I had Hobart, which was the most affordable market in Australia. Which one would you choose? The last thing I want to talk to you guys about is the whole this state is too dependent on this and that state is too dependent on that. When I purchased in Hobart back in 2017, all I heard was that Hobart had no major industries and that it was way too dependent on tourism, which was completely untrue by the way. But what is not a myth is how dependent on construction Melbourne and Sydney is. Not just Melbourne and Sydney, many other states as well. The governments are spending mind-blowing amounts of money on infrastructure. And what happens when they run out of things to build? What I'm hearing a lot right now is that Perth is way too dependent on mining. But what most people don't understand is that Queensland is just as dependent on the resource trade as Perth is, if not more. If you don't believe me, go to the state government's website and look at the number of jobs in that particular sector. It is just as high as Western Australia's. So the whole point of this is that people make statements all the time. Some of them are true, some of them are not. So it is up to you to do your own research and verify these opinions and make sure that you're making the correct decisions based on your own research and not other people's opinions. Alright guys, I've just shared with you some of the factors that I personally look at when I invest in a certain market. But these are only some of the factors that I look at, and there are plenty of other ones such as population growth, job growth, employment data, income data, migration data, construction supply, housing supply, and all of these. There are honestly hundreds of different factors to consider. We simply don't have the time to go over all these factors in this video, and this is why I would encourage you to do some research of your own. Now, let's talk about the next property market to boom. Obviously, nobody has a crystal ball, and it is almost impossible to accurately predict growth in any market. However, looking at the fundamentals, the property cycles, the trends, and everything we have just discussed, which market do you think has the best chance of success of repeating what Hobart has achieved over the next 5 years? Let me know your thoughts down below. Alright guys, this brings us to the end of the video. I want to thank you guys for watching it to the very end, and I'm sorry I haven't been making as much content lately. I'm just taking some time off for the holiday season to recharge my batteries. I'll be back stronger next year, bringing out even more content for you guys. But let me know what you want to see down below so I can make these videos for you guys. I hope you guys have a great holiday season, spend some time with your family, and worry about all this investing stuff later on, because the most important thing in life is your own happiness and your family. So make sure you focus on that. And I'll see all of you guys after the holiday season.